There's one stock under $2 that is about to explode, in my humble opinion. It is partnered with Amazon, and it is a sector that has been underlooked for 6 months or more. We're not talking about AI. We're not talking about healthcare, like United Healthcare, which was at an all-time low recently and then got bought by Warren Buffett. And we're not talking about any type of quantum or drone aviation euphoria either. The ticker is PLUG. Sorry for touching the microphone. It's Plug Power. And let's jump in right now to why this is a good spot to buy this company. This is a chart that is down, okay? That $2 level is very close, whole dollar level, going all the way back to September of last year. And there's a place to risk off of $1.50, basically, okay? But if we really zoom in, we can see that we can even risk off of just about a couple weeks ago this level here, okay? 170, which is very favorable. And there's enough volume here, okay? This doesn't look like a lot of volume, but this candle is almost $80 million. It's actually a lot more than that. I don't do public math in videos. Let's look at what this company does so you can get even more idea of why I'm talking about it here. They do hydrogen fuel cell technology. And you might say, oh, like the Hindenburg, the blimp that didn't do so hot? No, we're talking about actual partnerships with big companies, including Amazon, to the tune of 17,000 Plug Power fuel cells in 80 fulfillment centers. And they have an agreement starting this year to add a ton of hydrogen annually, okay? And so you might be saying, a ton is a pun, not intended, a lot. Why hydrogen, right? Well, it's not anything new about a product breakthrough or any type of government investment or strategic move preventing China. It's simply that it just makes sense. Think about people ordering packages 24/7, and you need a forklift essentially that can work and be low emissions, okay, and also be effective. They do have on-site renewable power at some locations, but also Plug helps with that, okay? And I think Amazon could use old-fashioned forklifts, okay? It might sound kind of frivolous to be talking about investing in a forklift company, but when you're thinking about the scale of Amazon and how important robotics is to their operations, every single product being sold through essentially a web page and then having to be fulfilled, the prospects of this company start to get pretty interesting, especially considering it's an under $2 stock. It's very inexpensive. And Amazon does have to be in regulators and the greater public's good graces. And this is a avenue to do that. The main issue here is, well, they do have concentration in this particular sector, but besides this concentration, the sort of negative brand of hydrogen, this company is actually making it happen, and they've already chosen this company, so they obviously know that they can fulfill. I don't think that humanoids are going to be in Amazon's warehouses doing exactly what this company does, essentially because of the size of a forklift. Okay, so I don't know about you, but I haven't heard of hydrogen-powered humanoids. I've seen human-type form factor robots, but essentially what we're talking about is you do still need not just a robot form factor that can carry products under 50 pounds. You need an actual carrier of large items and large groups of large items. So it's an $2 stock. Below $2 stock, margins are still negative. Is that a surprise? They're burning cash. Is that a surprise? No. They are working with a investment bank that is traditionally tied to startups. Okay? Let's say it like it is. They are a startup. We're not pretending they're not. The fact that they're succeeding even in this current administration, despite being a sort of a company that would benefit from a more sort of EPA positive administration, is a major tailwind, considering anything could happen in 3 years. And I'm not suggesting you do hold the stock for 3 years. I'm saying even if you do look at the next few months, revenue is up, and they do have this sort of business unit, which just refers to their charging and units in these warehouses. This is just a word for their hydrogen forklifts, as far as I know, and as far as we need to know. I'm pretty sure that's all that is. That unit tripled year over year. Okay, and that's the unit that is representing the reason to invest in this company, which is the warehouse automation use case. They do have an international partnership, massive country and market, and they're getting renewed and expanded contracts. Okay, so we can look at the price. We don't really have to worry about the details of their competitors, although we want to make sure we see what FuelCell is doing, FCell, and what Bloom Energy is doing. They have had huge moves recently, but I do think Plug Power is the one to focus on right now in this sector. FCell has been beaten down a while. This is sort of, why buy a low price stock that hasn't shown much interest. Okay, there is increased volume here, but when you compare it to Bloom Energy, this has been insane. Okay, and this part of this move in Bloom was there was a big partnership back here, and this is what we're talking about here. We've heard a lot of the euphoria around Oklo, small nuclear reactors, and Bloom Energy is in the same breath. Okay, these data centers need energy, and this company is helping with that. Now, I do think the closest analog, people are going to be looking at Bloom Energy, and when I say people, sometimes I mean algorithms that clump these all together. And so if you want to buy the next Bloom Energy or a Sympathy, you start to look at FCell, which has had a little volume, but again, the chart is not something that's that interesting if we didn't already know there was interest in the sector in connection to BE, which had a massive move. So for that reason, I think the only way to really go is Plug. And there has been some increased volume here. Volume sort of dries up. You actually sort of want volume to dry up when a stock goes sideways, because you're getting in before the buying volume. So this isn't an easy stock to pick up on a scan, but here it is. It's below $2. I gave you some levels. We have some fundamental reasons in a partnership with Amazon, and renewed contract with Amazon and with its other customers. So we know this is a penny stock with low margins that's burning money, and we know all that, and we still have an opportunity to buy it. Okay? If you're not one to buy cash burning companies, well, you are cutting out a lot of opportunities that can have big moves up on euphoric type press releases, which Plug could have one, and it might not even need a euphoric type press release to have a move similar to Open Door, which did some restructuring. And is Plug the next Open Door in terms of movement of the stock price? No. Could it be? I don't know. I can't say it won't be. I do think there's blue skies to the upside. There's a tight risk reward position. It's a safe, consistent play. Strong pick, in my humble opinion, at this time. If you want to chat about stocks in a community setting, think like a Discord or a similar type of not forum-based software, but also not a Facebook group, head over to stockscommunity.com. We can chat there for 7 days for $25. If you think it's worth it, if you think some of these videos have been timely, head over there, try that out. If you haven't hit that subscribe button yet, hit that subscribe button, and I will see you in the next one.
This is Sam Putnam.
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 This is Sam Putnam.